Switching gears and now talking travel. The airline industry trying to fly high once again after taking a major hit from the coronavirus pandemic. But our next guest says it may be a long road to recovery. Here to discuss is Moody's Investor Services Senior Vice President, Jonathan Root. Jonathan, good to have you here this morning. I was just reading this morning that Gatwick Airport in London says that passenger numbers may not return to pre-coronavirus levels until 2024. Are they just being cautiously, optimistic there? I mean, that seems like a super long time.
It is a long time, and I don't know if they're being optimistic or pessimistic. If you look, right now, obviously, travel demand is down astoundingly. No one ever assumed down 90% or so. With respect to time frame, IATA is talking about 2023. Alexis, I can tell you in the modeling that we did, our what-if scenarios for our rating actions that we did in May, we assumed a recovery in 23 as well. In our two scenarios, we have a modest recovery starting very slow in 21 and ramping up to that level. And in our slow case, 21 is going to be a low year just like 20. So it's hard to tell. With the financial crisis, it was a 7-year recovery in the U.S., but importantly, the airlines were profitable and generated good cash flow through that recovery.
Jonathan, if the recovery does in fact take until 2023, do one of the major airlines go out of business? What I've seen from the airlines outside of the government stimulus, they've been raising a lot of debt on top of balance sheets that already stunk. So how do they survive till 2023?
So you're right. They are increasing debt and expanding their liquidity. Liquidity is the most important factor in credit at this time. And, the airlines, they have learned that their costs are more variable than they anticipated. And our ratings do not reflect our expectation of bankruptcy filings. In doing modeling and financial projections, assuming a recovery can start, in early 22, the companies have the potential to repay the debt. They're not going to repay it overnight, but they can. If you look at the 7 U.S. airlines that Moody's rates, those companies in 2019 returned $9 billion to shareholders. They spent $16 billion on capex. They spent $34 billion on fuel, and labor expense was $48 billion. So we know looking ahead, returns to shareholders are going to be zero. Capex is going to be meaningfully lower. Let's cut that in half. That's $17 billion of potential for debt repayment. If oil prices stay, in the 40 range, 19 oil was at 63 a barrel. So there's going to be significant savings. And we do believe that the companies are going to be more efficient and they're going to do more with less going forward because of this experience. So if demand comes back, we believe there's the potential to repay that debt. It's not going to happen overnight. But as volume grows, operating cash flow grows, there will be that potential.
Jonathan, let's talk about who you think is best positioned to weather this pandemic. This morning, we've got United Airlines saying that it's starting to see things improve, that it took out a $5 billion loan, and it says that the outlook is improving. Also expects to have $17 billion in liquidity by September. Is United one of the stronger major airlines going forward, do you think?
With $17 billion of liquidity, United is going to be well positioned to manage through this crisis, even through 21 and into 22. Look, Southwest Airlines is the highest rated airline at Baa1. That company is very strong. It's demonstrated its strength since mid-March with the different ways it raised capital. It's issued equity. It's issued a convertible. It went to the term loan market, the unsecured market. Southwest has repaid most of that term debt already. Well positioned. Delta has raised $10 billion already. So these companies, our focus is on liquidity and our expectation or our belief of the potential to repay. If you look at Allegiant Travel Company, the smallest U.S. airline that we rate, that company is going to have a daily cash burn of $1 million a day or less, and that's assuming no recovery in demand. And that's an example, whether it's a big company or a small company. United discussed its daily cash burn presently in its release this morning. These companies have stripped out costs and commitments to allow them to manage through this unimaginable storm that they're facing.
All right, we're going to leave it there. Jonathan Root, Senior Vice President at Moody's Investor Service. Thanks for your insights on the airlines.
Thank you very much.